we're going to move on to how much to start with. And we're going to scroll down a little bit. And again, this lesson, the main premise, again, within this program that we try to instill with you guys is to just not invest anything during this program. We want you to get through the material, retain the information, try to learn from the mistakes that we've already made. And then once you get through it, there's plenty of time to trade with us in the Alpha Chat. So this is showing you why we want to start with zero, why we want to start with $100 in the M1 account to start that longer term investing. And you want to focus more on how much you're going to save weekly and not how much you're going to start with. Most new traders we talk to is, should I start with 5,000? Should I start with 10,000? Should I start with 500? That's really not the main concern. The bigger concern is how much will you save weekly, and that's going to be the true barometer of how quickly your account is going to grow with time. And that's the biggest focus here is start with zero while you're doing this program. You get through it. You can start with as little as you like, but the bigger thing is setting up the weekly contributions into your trading account, into the retirement accounts, so they will grow consistently, and you will be able to handle the P&L fluctuations as that account grows versus just starting with a large sum of money and you trade too heavy and you can't handle the swings of that account. So this is this primary lesson of why we want to start with zero. Moving on, we're going to go over some order types. And there's going to be a few common ones. There's going to be market, limit, and stop are the three most common orders we're going to use. For 99% of my own trading, I'm only using stop orders, meaning that if I want to buy a stock through 24, and I'm going to change my screen to just give you guys a visual example so it's a little bit easier to follow along. I have this stock up here, MYGN. We can see this bull flag that's forming under 24. So basically, I want to put my buy stop order right above this price. So once this stock trades above 24, my stop order will become a market order and it will mark me into the position. And this is where I don't have to be in front of the computer all day watching MYGN trade and waiting for it to go through 24. It will do that order type will do that automatically for me. And that's why we want to use that. And once we put the order in, and I can show you a trade that I'm in at the moment, we have this RX DX, which we bought today with a buy stop through 112. So we can see here, 112 couldn't break. Let's see if I can get some arrows. So 112 couldn't break. It couldn't break again. But this is the first time it was able to successfully break above 112, and that's when we want to get involved. And all I had to do was place that buy stop, 112.05. Once that stock trades above it, that buy stop order becomes a market order, and I'm filled into that position without me having to sit there all day and watch the stock break this level. This is one of the reasons why we like this order so much, is that you don't have to, for one, be in front of the computer watching the name break out, and two, you're not going to chase names as much as if you were going to use, say, like a market order. If I'm going to watch this name break 112, that's times when you might chase or miss the trade because you're sitting there watching it, where when buy stop is in, it's going to trigger for you automatically. And then once you are in, we put the sell stop in. You can see this red line here. This is the low of the day that the stock is traded at. And my stop order to sell the position, if I'm wrong, is below here. So my stop is at 105.89. If it trades below 105.89 without me watching it, it's going to get me out of the position automatically. So this helps you, using these orders, why we use them so much is it helps you stick with your game plan, and it helps remove a lot of the emotions of trading. When if you're using market orders, that's when you often see traders, they buy too late because the name goes and they're waiting for it and they end up paying up more for the name. And on the way down, they hope that it reverses and they end up holding the name typically longer than they should have. And this is why we really emphasize using the stop orders as much as possible. We really try to avoid limit orders because you're often going counter trend. So if you're using a buy limit, you're buying below the market price, and you're basically trying to go against the overall trend. And on the selling side of the limit sell order, you're capping your upside. So if I think RXDX tomorrow is going to go to 120 and it can't go any higher, I put my limit sell order here, but it goes to 125, I cap my upside, and that's something we try not to do. Now, do we use limit orders? Do we use market orders? Of course, but for the majority of the time, we try to focus more on the buy and sell stops to help remove as much of the emotional decision-making from the trades as possible and helping us stick with the game plan. So the main thing from this, master using these buy stop and sell stop orders as best as you can, and it will help simplify your trading as much as possible.